Hey everyone, just wanted to share a little bit of an update on my higher highs site that I've been working on for the last while. It's been interesting in that one of the things that I like most about it is that I can see different markets all compared kind of side by side. And traditionally, the view that you get by default is to sort of show which stocks are, creating the sort of most momentum over the last year. And it's been the US stocks up until, let's say, the last month or so, when Trump's tariffs have been really eating into the market confidence. It's always been a story about the US stocks, with traditionally making the higher highs. But you can now start to see some of the UK stocks, for example, are the ones that are at the top of the charts. So, you still got your favourites like Trubridge. They're still ticking away, but you can see they've had a bit of a pullback. Some of the Australian stocks have had a bit of a pullback. And so if you look at some of these, you'd think that that's a great buying opportunity if the market does start to recover. And, I keep a close eye on the triple Q because, I typically like the NASDAQ stocks. And so if the triple Q looks like it's going to start to recover, and it has been for the last few days, but you'd want to see a little bit more progress. You don't want to dive back in case it's sort of a bit of a fake bounce. But the CPI figures came out and they were better than expected despite all the sort of US economic shenanigans. But as I said, it's been interesting to see some of these UK and even some of these Hong Kong stocks are now starting to take the lead from the traditional US stocks that were running quite well. And whenever there's a bit of an upset in the market, there's always something that's going up. And so one of the things I like to do is I like to drop back to the 1 month view. I think 1 week to me is too short. Like 1 week is, could be anything a bit more speculative, but I like to sort of have a look at this 1 month view and change it to, let's say, up 25% over a month, and just see what's running. And so all of a sudden now you can see that it's these China stocks, the Hong Kong stocks. These are the ones at the moment with the most momentum. Vasta, I don't even know what they do. Educational printed and digital solutions are private schools, so they're ticking along quite well. But you can see before this was all US stocks that were outperforming, over the 1 month period, and now you're starting to see some more of the Asian stocks coming through. So if you've got a broker like Interactive Brokers, you can trade, these different stocks. Chinese stocks you might have to trade through the Hong Kong stock market, but you can certainly get access to, a wider variety of stocks, with a, more international broker like Interactive Brokers. So it's interesting just seeing what's coming through. Like I'm mostly in cash at the moment. Like I've gone from being 100% in cash, and now I'm probably about 80% in cash, just waiting for this dip to sort of confirm that it's reversing. I don't want to dive back in if it's going to collapse and fall apart. But it is interesting seeing which of these stocks are still coming through, and I can imagine all these defensive ones, you might start to see some more interest. Someone pointed out that Volkswagen could be interesting, and so let's see if I can find Volkswagen, VW, Volks. Let's have a look at this one here. And so Volkswagen's gone from being quite a expensive stock, and they've fallen off massively. But the CEO has recently come out and said that with all the talk in Europe about gearing up for spending more money on local defence, Volkswagen is saying that it's got quite a few factories that could be re-geared to develop military type vehicles and weapons and whatever else. So something like that I thought was a little bit interesting, with all this hype around Europe at the moment starting to take more of a lead in their national defence. It could be an interesting thing to keep an eye on. So anyway, let's go back to our 1 year, our up 100%. These are the sort of more bullish stocks, and something that we've been working on. If we look at something like Palantir, like they were, certainly a market darling that have pulled back a fair way. You'll see that what we're doing is this is now being written by AI. So we've got, This is now being generated by Gemini, where it goes out and it'll say, here's the current description, here's the industry description, why this might be of interest to investors. But what we're doing increasingly is we've now developed this AI opinion section. And so again, purely powered by AI, where we're feeding the AI platforms the complete financial history of a stock, the pricing history of a stock. We're feeding the last 10 news articles, and it's now being able to produce a score out of 100 as to effectively how well positioned that stock is. And really the only sort of thing we want it to know is, what's a confidence score, whether it's going to likely to increase over the next 3 months. We need to tweak this to take better awareness of the overall market. So if the overall market's going down, you can have the best stock in the world, but if the overall market's going down, then there's a chance that the stock might get caught up in that. And so this one's currently powered by Gemini, but we've got the ability to turn on DeepSeek and ChatGPT, and it's going to be really, really interesting to see side by side how each of the different AIs take all that same stock data and stock information, and then see how the stock should be going or should be performing. So some stuff that we're working on that's quite interesting. You see that the revenue's through the roof. It's back at a fair value area, depending on how you like to interpret the RSI. But I think anything between 40 and 60, especially if the price is starting to head up, is certainly a good buying area. Anyway, and so that's what's happening. So the main point of this video is that there's always stocks that are running well, no matter what the market, the overall market might be doing. And this is a very, very easy tool to try and find out what might be going well. If you're only interested in, let's say, the US market, you can turn all these off. And it'll tell you which of the US stocks are outperforming. Japan didn't turn off yet. Might have to refresh it. Get rid of Japan. And so these are the US stocks that are performing well at the moment over the last month. That's that printed digital one. Ultra shorts. Shorts. So these are the ones that are shorting the market, and that's obviously why they're running well. Tend to ignore those. Commercial real estate. Medical. I'd expect to see some of these defence stocks starting to do better. Another medical one, running quite well, pharmaceuticals. I think that I've read that, or I've seen that Trump's sort of talking about, tariffs on medical, pharmaceutical imports from overseas. Some more of these ETFs are running quite well. Anyway, as I said, that's an update, so keep an eye on the site if you're interested in this sort of thing, but we're definitely building more and more AI into the platform, and the whole idea is that stock brokers will come through and they'll analyse some of these stocks, once a week, once a month. They might not analyse everything, but we're going to be able to have the ability in real time to analyse, 37,000 plus stocks globally, and then have different AIs add their view to the overall performance of the stock based on its pricing and fundamentals, and produce a bit of a rating that will be applied to all these different stocks. So as I said, it'll be interesting to see how they have a different viewpoint based on all the financial data and information below. So early days, but it's something I'm excited about. I'm looking forward to it. The next trick that we'll be able to do is compare stocks side by side. We'll be able to do that very quickly, very easily, so that you can put in, say, Apple and Nvidia, and say to the AI, can you compare these two stocks, next to each other, and develop a view about which of these two you think is the better to invest in, over the short, medium, long term, depending on what type of investor you are. So, just thought I'd share that, just purely for interest. And the site's completely free. There's no charge to use it. It's just, as I said, a bit of a pet project that's enjoyable to work on, and it looks simple at the front end, but I can assure you there's a ton of data in the back end. Like there's massive amounts of stuff that's going on to, keep the site up and running. And it's incredibly fast. It's all built in Rust, and as I said, using a lot of the latest AI stuff that's out there. Anyway, thank you for listening. If you made it this far, I appreciate it. Thank you. Any feedback about the site is very welcome as well.